Hello, active traders and investors. This is Ken Calhoun, president of TradeMastery.com, with another exclusive video for Money Show, our breakout chart of the week. New episode with some really exciting charts to look at. As always, all information is for educational use only. We make no profitability or performance claims. We make no advice or recommendations about what to buy, sell, or hold, and by watching this agree to not make actual trades. Hope to see you at an upcoming Money Show or Traders Expo. Let's get underway with today's charts. We've got one day trading chart and three swing trading charts. Our featured day trading chart of the week is ARGX, the ticker. You can see this illustrates a really perfect gap continuation breakout pattern. It gapped up to the whole number 55, ran all the way up to 69, a 14-point run, and then pulled back a bit here as we record this, just around 11:23 in the morning on Thursday, December 14th. What I like about this chart is it illustrates a couple of patterns. The first is the fact we have a minor gap that gapped up above the previous day's high, just slightly. It gapped above the previous day's high. So there's a minor gap. And the second pattern of note is a bullish cup. So gapped up a little bit. It got a lot of buyers that ran it up 2 points. It pulled back a little bit, made a bullish cup pattern, and then broke out, made a bull flag here, made another breakout run all the way up to the 69 and then pulled back. And again, just a reminder, as I've published for years and whenever I speak for Money Show, I always tell everybody we sell anything with a 9 in it. 9 is a good exit target for leading a trade, but you never buy it way up at a 9-point range, right? Anyway, you saw this at a really good point range. 14 points of total trading range for a $60 stock is phenomenal. And the volume is really good too. So I like these kind of charts because it's potentially a lot easier to get a 1 or even a 2-point win for an intraday trade or a winning swing trade for these gap continuation momentum runners that have good point ranges and good volume and volatility. So that's our first chart of the week, ARGX. On a 15-day candlestick chart, it looks like this. I guess that brings up another quick point is you will often find sequential gaps kind of rule the roost, or you got really great momentum. You get a first initial gap maybe a few days ago here on the 11th, and it did a mean reversion, pullback, and then a bullish engulfing here and continued on up, made a cup pattern breakout. The main point is always be on the lookout for multiple gaps. Kind of a hint that may be coming up again at some point in the future too. Wouldn't surprise me to see a gap up to 72 or something next week. For that matter, wouldn't surprise me to see it collapse all the way back down to 30 either. I'm a trader. I'm not a crystal ball predictor, but price action gaps that have multiple sequence or sequential volatility with gap after gap after gap often makes for spectacular trading opportunities. So ARGX, our first one up to bat. Next up, we've got CF. This is a nice breakout continuation, kind of a bunny slope with fewer points of range, going from a base of 36 to a high of just over 41 in our current markets. What I like about this chart is it's got my classic large green momentum candle at the right side of a bullish cup or congestion zone that attracted a whole wave of new buyers sequentially. So you've got a nice first sign of a breakout, then a second confirmation of a breakout. Not quite making an ascending triangle just as of yet, but it's trying, and it's got a nice sequence of buyers in it, taking it up at least 5 points, right, from 36 to 41, almost 42. So almost 6 points of range on a $40 stock is good. If we pull up the 90-day daily candlestick chart, you could see it goes a little something like this. If we clear the lines, you could see it also on the daily candlestick has that same pattern where you've got a bullish cup pattern here. You've got a bullish lower reversal shadow on this candle, broke out above the 50 SMA. The main point is momentum. The other thing to look for is the ratio of green to red candles, and if you see mostly green candles like here, that's a good sign that the bulls are in charge and they're bidding it up to new highs. So anyway, bullish cup breakout on the 90-day candlestick chart makes this a good candidate as well. So that is CF. CF, the ticker. Next up, for those who trade the cheaper instruments, here's a volatile pick, DPW. And I typically not a big fan of cheap stocks under $10 a share unless they have consistent trends and enough point range to make it worth my while. And this guy ran from a base of $1 a share, $1, all the way up to $6. So it ran from 1 to 6. Now these are very risky because oftentimes traders will buy a new high and then take a big stop. Then it runs without them, and then they buy a new high and it gets a stop, and so forth and so on. But I like the volatility from a point range on this. Right, this guy has a range all the way from 1 to 6. So that gets me interested as a swing trader. Look at the daily chart, you can see it's also ran up from a base of being a penny stock all the way up to 6. Now these are usually dangerous and you just get into trouble trading these kind of charts, so be warned. But for those of you who like to live on the edge, these wide range instruments that have some kind of consistency to them or a continuous trend instead of a pop and drop momentum stock, it has a good point range to work with. What I'll often do with most of my swing trades is scale in. So if I bought it, and not a trade recommendation, but if I were to buy this guy up at say $6.30 a share, and again this is DPW, the ticker. Let me type that in here for you. DPW, the ticker. If I were to buy it say $6.30, I would scale in. It's on these cheap charts every point or so. So I buy $6.30. Might add if it gets up to $7.30 and again up at $8.30. If it doesn't ever get there, then we just don't get in yet. But it does have point range that's spectacular from 1 to 6, a 5-point range with some semblance of a continuous uptrend. So that makes sense. Last but not least, we've got Southwest Airlines. I like this chart a lot better. It's got a nice continuous trend from 55 to 64, almost 65, almost a 10-point run. Southwest taking off from the runway back here with a flight on-time departure with a nice minor gap continuation. Please fasten your seatbelts and make sure your tables, tray tops in the upright position. Well, we can see it got an upright breakout. Southwest going from 56 with a minor gap. That's kind of the poker tell. It's a nice minor, small, under 10% gap that attracted a whole raft of new buyers, taking it from 56 to just under 60, 59 or so, right? And then it kept going up once it did break clear 60, all the way up to just under 65. So a nice continuous move up here in this chart. It's really appealing trading range, 55 to 65. A 10-point range on a $60 stock I'm in, right? So that's, and it all started with the story of a small gap, like planting a tree. From mighty oaks from small seeds grow. Anyway, you can see a nice minor gap continuation in this. If you pull up the daily chart, you can see it did a cup pattern breakout as well. Not my favorite type of chart. I like charts on the 90-day basis. I like ones like one I mentioned for y'all earlier, which is DHI, right? That's one that I'd mentioned weeks ago. I like 90-day charts that go a little something like this with more continuous trends. But I like the momentum, especially the recent buying strength in Southwest Airlines, as it traversed not only all three simple moving averages, but did a bullish cup breakout, and it keeps running on up. So the most of the airline stocks are up nicely the last couple of weeks, but Southwest has the best breakout pattern compared to Delta or United or American or JetBlue or whatnot. So anyway, it's a nice wide range chart going from 55 up to just under 65. So that'll do it for another episode of our breakout chart of the week. And again, to recap, ARGX, CF, DPW, and Southwest make for especially fine examples of breakout charts in what's been an uptrending market. So this is Ken Calhoun, your host, coming at you from TradeMastery.com. Thanks so much for being here, and I will see you in our next episode coming up a week from today. Best wishes for a safe and happy holiday season ahead as well to all of the world's traders and active investors. Trading the right instruments with very tight risk management and carefully managed position sizing or scaling entries and tight stops for things that go sideways or back down against you is the right way to do it. So trade with passion, trade with tight stops, play wide, not deep, and do well in your trades. Best wishes. Goodbye.